Hello everyone, Theunis Kruger here again from sunny South Africa, Western Cape. I'm the FX trainer for FXTM in South Africa. Right, like always, I'd like to check if you guys can hear me. I see there's 3, 4 people in attendance. So can you guys just let me know? Jezreel, yes, I see some names that is recurring. People are watching. I hope really you're learning and you're progressing. You're trying, you're learning, you're growing. That's how we master anything. So see, there's a couple of guys. Can you hear me? Can you see me? Does the sound fine? Everything from my side looks fine. Let me just double check. Audio looks fine. Can you hear me? Can you see me? Yes, Jajel, Azai. Okay, just somebody else as well. I've got Pong and Tinasha and Joyesh. Sorry if my pronunciation. Azai, I've got everybody says they're good. Right, let's start. Very, very important webinar this, guys. There's a lot of guys that have been training that get stuck. They know the basics, they know what to do, and then sometimes they just get stuck. And this is part of why they get stuck. This is why I'm recording this webinar. This is why I'm doing this webinar, so I can refer them back to this. The way we think, the things we believe can have a tremendous influence on how we do things and if it works or not. Right? If you, for instance, starts and you want to become a doctor, you start learning to become a doctor. The way you think is you're starting to think like a doctor. It's different than to an engineer or a plumber or an electrician. Each career, each skill set that you get determines that you think in a certain way, and that's why it takes time to train, to recognize certain things that other people might not recognize. So what we're going to do today, this is actually part 2, the process of building a trader's mindset or building a trading's mindset part 2. The first part, I focused on the whole process, all 4 phases that we go through. Today I'm going to quickly go through the first 2 or quickly touch on a couple, and then at the third and the fourth phase I'm going to stand still a little bit more. I'm gonna go deeper there so that you guys understand what it's all about. So, and it's part of also, like I said, referring people. So you guys are privileged that you're taking the time. You are here. I see some more people came in. There's now 6 people. Roloff, you guys will welcome. Yes. Um, it's very, very important for me that you grasp what's going on. Because I'll just give you a quick story why. Mark Douglas, the author of Trading in the Zone, he tells a story that that's very important, or that I think is important to realize. He was helping, consulting, helping traders, even big traders that trade with and huge funds that trade with multiple millions, billions even. And they also get stuck sometimes. He has this one example that he talks about, that of a guy that is a very good trader, huge portfolio that was trading, I don't know what it was, pension funds or whatever, investment funds. And something happened in his personal life. I don't know if it was a loss, somebody died or whatever, or some traumatic experience. And when he came back, then he had difficulty, getting a net profit over a series of trades. It was like his mindset was just distraught the whole time. And this was one of their best traders, the firm. So they got Mark Douglas as a psychiatrist. They got him in, they got him in to go and talk to this guy. And he didn't understand, this trader, how important his mindset was. These things were having an effect on him. And he understood this on the surface, but he didn't know how to handle it. So Mark went through a process of teaching him or telling him, listen, you are distraught now. So now you're trying to trade with the same volumes, but your mind there's an effect on your mind because of this thing that happened. So he just taught him to take it down, to almost start checking how he trades, on a demo again, not a demo, but just to get into the mindset, to get to relax again, and take his lots much slower, and just get into the flow of that rhythm, of the flow of the market again, and get used to it. And as he relaxed, as he again, got that feeling, got into the zone. Mark talks about the zone. It's when you focused and you You're just looking and you're just staying in sync, with that ebb and the flow of the market. And then the guy got up to speed and he was up and running again. So if it happens to those guys, what about us normal guys? So this is something we have to be aware of. So let's dive into this. Right, like last time, introduction, just quickly at step 1 and 2. At step 3, I'm going to start going deeper. So step 4 is the place where most of the work is done. Right, this is where you really start getting traction, and then at some stage, we don't know when, it'll be different for different people, but you will just feel you will feel this automatic phase that comes in, and then it starts getting easy. It starts getting easy to stay in this, what Mark Douglas calls the now opportunity flow of the market. So, but that's where we're gonna put in our work, right? And then obviously the conclusion and the answers. Anytime you have answers, guys, please let it rip. Then I'll try to answer you, or I'll bring it in. Give you the answers. Yeah, it's very important for me. The reason why I say that is because if you ask a question, you get the answer. It means a lot more in the learning process. Just getting a lot of answers that you don't know. You haven't even asked the questions yet. Right. I'm not going to delve. I'm going to spend time here now. You all know that you've got different experiences, but we all want to learn and grow. Okay, it's knowledge that brings us somewhere. It's finding out. I may have been doing something wrong, or trying and then learning and growing. That's the process how we go forward. The mastery process, we try, we learn, and we grow. Firstly, we realize obviously what is the basics. So in the beginning, we're not sure. When you find out, then you can practice, you try, you learn, and you grow. And if you just keep on and you don't give up, then you get to mastery. You start becoming more proficient. It's that with any process. The first, very quickly, that's when you don't even know what you're doing. So people start and they don't know what this is all about. They think it's a big lotto game that you can make a lot of money fast, and then they find out it doesn't work that way. Okay, that's unconsciously incompetent. You don't even know you don't know what you know. So and then step 2, you wake up, you realize, oh, I need to do something. Consciously incompetent. Now you know you need to learn. All right, and this is unfortunately the phase where a lot of people get stuck. They get stuck. They study Japanese candlesticks. They study all the indicators, and they look for the holy grail, a method that will help them. They found out a little bit about risk management, but they don't know how important it really is, and so forth. And the studying itself is not the problem. It's normally the shortcuts. Guys don't get to the basics. They try to find this method that will help them, become rich overnight, and it doesn't work that way. It's a skill like any other skill. It's a language that you learn like any other language, with a structure, everything. Right. So shortcuts is never going to work. All right. So, and then step 3, very, very important, the aha moment, when you realize nobody can really actually predict the market. And that is not what technical analysis is all about. It's just about the structure of the market and getting to know the early stages, getting the ability to see the early stages of the next trend, right? That's the first steps you have to realize. It's not about, never ever about trying to predict the market. Right now, I'm going to go a bit deeper. And this is also based on the book, Trading in the Zone, things he discussed there of Mark Douglas. There's a couple of similar books, but this is the book that made sense to me. I'm not saying that Trading in the Zone is the ultimate book, but books in general about, especially when you're starting or you're stuck, books about the mental processes, the psychological side of trading is more important. Because if you get that done, and that's what we're going to focus on today, then you realize actually you just need one very, very simple, well-defined, mixed with proper risk management and practice to make this business work. The bottom line of any business is to make a profit. If you try and make too much profit too quickly, then if your product or your service is too expensive, people won't buy it. Your business won't work. If you ask too little and you can't cover your overheads and your rent and stuff, then your business will also not make it. So it's that balance that you have to get right. And this trading, and it's almost the same. We're not going to force anything, but we're not going to do nothing as well. I talk about be patient and diligent. So this is the things that happen. Okay, so now we have our realization. Nobody predicts the market, so what now? Right. Now the first thing we have to realize is we start understanding the structure of the market, which is technical analysis. We try to identify the early stages of a next trend. Right. But why is it so difficult? If it looks so easy, I actually like to use the line chart. It's actually take some of the clutter away so you can see it. You can see it a little bit better. So, but here I've still got the slide of the candlesticks, but as you can see, it's zoomed out. So you're not focusing on a candle, you're focusing on the structure, up trends, down trends, and it's the early stages of a new trend. That is where the market gives us permission. That is where we look for opportunities, where we take a calculated risk. Right. When we start realizing that, we start working with that, I let the guys, when I train them, especially guys who are stuck, and obviously beginners, I take them back to a line chart. I'm just going to jump over there quick so I can show you guys. I take them over to a line chart. I tell them, listen, this is what you do. You draw in that structure for me. Up and down, up and down. See there, lines one missing. Up and down, up and down. Don't worry about the exact science of it. It's part science, part art. Not one single wave there is ever going to be the same. The structure is the same, or the structure, you can see the uptrends and the downtrends, but the waves are unique, right? So this is what we're trying to identify, the structure. We're trying to see the structure, the breakdown, the early stages of a next trend, the structure, down, lower tops, lower bottoms, a breakout of that. Now there's early stages of a next trend. That is then the structure again, higher tops, higher bottoms. So it goes. If you can't see this, then you're blind. It means you're jumping in all over, and your probability of making a net profit over a series of trades dramatically goes down. So I just want to go a little bit back here so I can show you guys something. I'm just going to draw this in, and I still do it. I know a guy that's very successful he's got a small strategy that he uses, one of his niche strategies that he calls the London Open. He looks at in the shorter time frame for a trade, and even before the market opens, he just goes back a little bit before the market opens and he draws in. He gets into the flow, gets into the zone, gets into the flow of this market, gets his eye in, right? Almost like any sport, you have to practice your warm up before the time. Now you can see there's a bit of structure. There's structure. There's structure. There's structure. Even there's a little bit of structure there. Goes down. But now you see this mess here, right? There's no structure here. Now, if you don't know the structure, if you know the structure, you might have had one loss here where you protected your account, still part of a good trade. But then you waited for the structure. Okay, see, there's a little bit of structure there, and then again there, and there's a little bit of mess again, right? Other guys blow their accounts there, people. They in and out, in and out, in and out. We take a calculated risk, a calculated risk, a calculated risk, a calculated risk, a calculated risk. As soon as we can see structure, lower tops, lower bottoms, we identify that structure. When that structure is broken and the opposite starts happening, there's a shift in balance. That's the area where we take a calculated risk. That's it. Right. It's almost impossible to blow account if you work like this. The guys I talk to that blows accounts, they just jump in and out. They get this urge to overtrade or to jump in and stuff. We're going to talk about that now. Let's switch back. Okay, so I hope you can see what I mean with the basic structure of the market. It's got nothing to do, guys, with predicting the price or anything. It's understanding the structure, waiting for early stage of a next trend, having a simple, well-defined method to identify where we're going to enter, where we're going to protect our account, and then risking that, risk management is just got to do with where you're going to get out, where you're going to protect your account when the market does not continue like it's supposed to, or like it showed you, like it might, and where you're going to take your profit when it does, right? So, and this has got to do with depth. With step 4, you realize, okay, I've got to get this structure into my brain. I've got to practice it until I can I always talk about the neurological pathways that happen when you learn. Until that neurological pathways, I've repeated it so many times that it's a thick little tree, or they call it a neurological network. So without that, you're done. It's not going to work, especially when you start with higher lot sizes. The reason why is very simple, and I've started using the following example to just almost like to be in sync with this one. It's just a little bit different. When you go to gym, right, and you in the beginning your muscles are not big, but you've got the muscles. The design is there. The principles are there. It's possible. So now you start practicing. You start, let's say, with 50. You bench press 50 kilograms, right? And now, obviously, when when your muscles have grown a bit stronger, then you can put up, let's say, 10 or 20 more. And so you slowly up the size as your muscles get stronger. Now, what would any experienced person that knows about this, actually, it's common sense, I suppose. Say if a guy gets to, let's say, 80, 100, let's say 80 kilograms that he can bench press now, and now he tells somebody, no, I want to go put 100 or 200 extra weight on. I think I can do this. The bottom line is his muscles is not strong enough yet. He's now stopping the process. He wants to shortcut. He wants to push a lot of weight now, but his muscles are not strong enough for that. So if somebody is stupid enough, foolish enough to put it on for him, and they don't protect him, then and he tries to do that, that weight will just crush him. Okay, so you get hurt. Now that's exactly the same in the market. You have to slowly build it up from understanding the basics, understanding the structure, seeing it, and then slowly increasing the weight, practicing through the stages, building that neural network that make your mind strong, that the neural networks. So, and this is what this picture is all about. Okay, we do work on the inside. We're basically making our root system strong underneath. You get guys that looks like they're making a lot of profit. If they haven't got a good root system, that won't last. I've got lots and lots of stories about guys that actually they think they're lucky, but they're unlucky. They make a lot of money fast. They were just they thought they were lucky, and then they just put in more money, and then eventually they just lose everything because they're not sustainable. This is sustainable. This is not sustainable. It's about the root system, right? So step 4, the traction part, is about building your root system, getting that structure, practicing it into your brain, right? So the thing that I want to delve into deeper here is there's 4 core mindset difficulties or problems that causes people to have difficulty in this specific phase. So now you're practicing, you know this, but sometimes it's just you get confused or you're not sure, right? So let's delve into this 4. And what you see is very interesting. I call it like 4 roots. Now the fruits, or the what grows out of these roots, have multiple different variations. But still the roots are the same. If you can identify, and if you can understand what I'm saying, and go and look while you're practicing, and you identify these roots, and you practice them out of your system, you start thinking like a trader. Your mindset changes like that of a trader. Then you're thinking about these things like a trader does. Then it just becomes easier and easier to stay in that ebb and flow of that market that we looked at. This is the ebb and flow of the market, right? There were some riddles there. There it ebb and flow, up and down, up and down, up and down. You get these areas, you always will, but sometimes up and down, up and down. That's the ebb and the flow of the market. We want the ability to almost effortlessly stay in this ebb and flow of the market. You see it, you take your calculated risk, you manage your risk. There the market shows you, it speaks, it says, so you take your profit that's left there, you take a calculated risk, you stay in this ebb and this flow. This is all this business is about. Then you make a net profit. There's the possibility is high for you to make a net profit over a series of trades. That's it, guys. It's not about getting a doctor's degree on 20 different currencies or indicators and oscillators and all sorts of theories. That's not it. It's about cash flow, getting your cash flow sorted out, or this sorted out so that you can get your cash flow going, right? Small in the beginning, like I said, and then you slowly grow it. So let's look at the first one. What does it mean? People fear being wrong, or we don't like being wrong. I mean, it's logical. But in trading, if what you think is wrong and right is not correct, then you have a lot of difficulty staying in that ebb and flow of the market. Now, what do I mean with this? What I mean with this is predicting the market. I said it before, and nobody knows, nobody can really predict what the price is going to do. To be able to predict that, you need to know every single person that trades the market. You know their methods, you know their timing. It's not possible. There's too many variations. So the whole thing about predicting, saying to yourself, I know what the market's going to do now. The market is going to go up. That is absolutely toxic, if I can put it like that. Okay. Right. So why is it toxic? Because if you associate, if you think you can do that, then a lot of emotions are going to be involved in that. Mental pressure is going to be, think this market has to go up now. Now you're trying to tell the market what to do. It just doesn't work that way. Right. We've got to learn to stay in that rhythm of the market. So with trading, when you start to know that rhythm, and you can see, when you know we're looking for, you can identify that structure. You forget about trying to be right or wrong. We're not trying to be right or wrong. We're just trying to identify the early stages of the next trend, right? As you practice that, you forget about being wrong. There's no more stress about it. That fear totally goes away, right? So if that route is away, then you are on your way. But there's 4 of them. So let's go through the other ones as well. The fear of losing. Right. So now we know now we're not trying to predict the market. We're just looking for that early stages of the next trend. We practice, so it's easy for us to even see it develop on the right side of the chart. Right. So that's gonna be, it's gonna be easy for you to stay in that flow of the market. Now the next route is losing. Fear of losing. Nobody likes losing, right? But in the context of a normal life losing, what is the context of losing? A profit or a loss? A loss, obviously, people associate losing with a loss. What is the context, the proper context for us that we have to think about the mindset of a successful trader? Do we have to fear loss or not? The easy answer is no, right? Since we cannot predict the market, since we take a calculated risk with every trade we take in the early stages of an next trend, somewhere in the early stages of a next trend, right? Since we cannot predict the market, sometimes the market will take us out. So we will put a stop loss and the stop loss will be triggered, right? So how do we think about it? How do we properly put that into a mindset to digest that and to lose that fear or the pain we have of losing? Okay, the proper way is we take a calculated risk. Everybody agrees on that. Before I go on, I see the question. The book that I talked about, Ujesh, is Mark Douglas, and the book is Trading in the Zone. Okay, this is where I get most of my things. This is just the way he talks about it. I've obviously put it a little bit different. The other books have similar things because this is core things we do, but people might have different words for it and so on. Right, let's continue. I just want to get out of rhythm with with the questions and so on. Right, the questions are important for me. Okay, so how do we see losing? Right, if you have a normal business, let's say you have a supermarket or whatever, you have got rent to pay, right? You've got the salary of your people to pay. You've got your suppliers that you have to pay. All these things is overheads. Now, the proper way of seeing those trades that we lose, that is part of a calculated risk we take, is that's part of our overheads. So we are going to have those. We're going to limit them by looking at the structure of the market, by taking the calculated risk. But if there's not lower bottoms, lower tops anymore, then we are willing, to get out, or we want to get out to protect our account because we don't know what is happening now. So if it's supposed to be the early stage of a downtrend, there must be lower bottoms, lower tops. If it starts making higher tops, higher bottoms, then we are out. So then the structure has been changed, and there's no more. The market warns us in actual fact to get out, protect yourself. Right now, those losses are actually part of a good trade then, and it's part of our overheads. If you as a business don't want to pay overheads, then you will not have a business. If you're not willing to pay rent or salaries or your suppliers, then you can't have a supermarket, sorry. So in this sense, in trading, those losses are going to be good losses. That's part of your overheads, and they're part of a good trade. Very, very, very important. The association you make. A good trade has got nothing to do with a profit or a loss. Nothing. A good trade is simply when I can see the structure of the market, I take a calculated risk there and I manage my risk. Right. The same there, the same there, the same there. That is what a good trade is. Nothing. If I have to, nothing to do with a profit or a loss. If I have a loss inside that good trade, it's a good loss. I protected my account. I don't want my account to get wiped, like what happens when people don't, they hope things are going to get right. They hope the market, they pray the market's going to turn around. That is deadly, right? So what is a bad trade then? Again, a bad trade has got nothing to do with a profit or a loss. In fact, I just had a session with a guy. He made some nice profit, and I told him all of those trades are bad trades. He said, "No, but I made a loss." I said, "This is part of your problem. We made a profit." He was associating good and bad trades with a profit or a loss. What happened is he took trades. He was impatient. He didn't wait for the market. So he's not listening to this structure of the market. He was not listening to what the market was saying. And yes, he went in and where he should have had quite a nice profit, he got tense and he took his profits early. So that's a bad trade. He messed up that trade. He didn't follow the plan. He didn't stay in the rhythm of the market until the market told him to get out. And the other sense, he saw the market going against him and he closed it up prematurely. And he thought it's a good trade. So in that sense, again, he was meddling with his trades. That trade was still within the structure of the market. It didn't break the structure of the market. So many times those trades go on and you get a nice profit, and you need the profits, guys. A business needs profits because there's cycles. You never know what's going to happen. You need those profits to pay your overheads, to be able to build up a buffer for the times when business are a bit slow or whatever. So a business without the profits, if the market wants to give you profits, you need to be able to take it. All right. So losing, we lose the fear of losing. We lose the fear of losing, whatever. Or we get rid of the fear of losing. So it's about good trades and bad trades. Good trades, we listen to the markets, we stay in the flow of the markets, we manage our risk, we take the calculated risk, we manage the risk. That's it. A bad trade is when you don't listen to the market, when you don't manage your risk, when you don't take calculated risks. I had a session yesterday, or yes, I think it's yesterday, with a guy that said, yes, he was doing so well, and then he thought, no, he's going to take higher risks because he thinks he's doing, he's in rhythm now, he can trade now, so he's going to take higher risks because he wants more reward. 3 losses in a row and most of his account was gone, right? So it doesn't work. You have to stay in that rhythm. You have to manage your risk very, very carefully. So that was also a bad trade because he was now risking too much of his account. So greed got hold of him. So for him, the solution is to say, I will not do it again. I agree. I acknowledge that it's wrong. I'm going to stick to good trades, to limiting the amount of risk I take per trade and being consistent. Consistency, staying in this flow. If you do something wrong, the idea is to acknowledge that you're wrong, and then to learn so that you can learn and grow, and make the mistakes less and less until you don't make it anymore. Right, the next route that we have, missing out, over trading. Yeah, I remember this was a big thing for me. You open the trades in the beginning when I started, especially the shorter time frames. Yes, you just want to jump in. Everything looks like you're gonna make money now, and then it just doesn't work out like that. You're an emotional mess, stressed out. Right? Okay. This route is missing out. How do we get rid of that? Now, again, very, very easily. We are not telling the market what to do. If you're over trading, it means you're trying to tell the market what to do. You want to jump in here and you want lots of profits. The fear or the fear of missing out, we get rid of that by understanding, and again by practicing. We are waiting for the market to tell us. We're waiting for these early stages of the next trend. We don't take trades otherwise. In the early stage of the next trend, there's if you miss one opportunity, there's usually a couple of opportunities. These little structures there. This is where the market gives us an opportunity. But the further down you get into a trend, the less the probabilities of you making a risk or making a profit. The higher risk becomes, and the less your potential profit can become. So it just doesn't make sense. So that's how we get out. How we get out of that fear. We listen to the market. We realize how important it is, and we stop taking trades where we've got a huge risk compared and not a lot of profit potential anymore. So and again, you'll see how many of these things are being rooted out just as you practice and understand what you're doing. If you're practicing this, seeing the structure of the market, it's just a normal line chart. You can do it on any time frame, guys. Any time frame. Let me just clean this up. Clean charts. This is a 4 hours. Just easier to practice on the higher time frames because there's more people involved, so the structure is a little bit easier. But even if you go to the 15 minutes, the lower time frames, you'll see that structure there. You can see the downtrend. There was a ranging market. You can see there's another downtrend. There was a bit of an uptrend. If you don't see anything, then there is nothing. So you identify that structure. There's a nice little downtrend there, and it blows up there, some nice profit there. So as soon as you can see the structure, if you can identify it, there was a good opportunity. So you will start seeing the opportunities as well. Right, higher tops, it starts mingling in, and there we've got another couple of opportunities. So the only thing is on the lower time frames, you have to practice a little bit harder, and this is part of the, like I said, it's part of the art. This is not the same. It's not 1 + 1 = 2. There's people's emotions that's involved. It's people. It's human behavioral patterns here. People buying and selling for different reasons. Okay. David, that's a good thing you asked here. What time frame will you specify to start trading? In the beginning, I suggest you start practicing, not trading, practicing on the higher time frames, simply because there's more people involved in creating those candles and those line charts. The structure is better, so you get your eye in, you start to see the early stage of the next trend. The disadvantage of the higher time frames is there's not a lot of opportunities, right? Because it is the higher time frames. Okay, the lower time frames, and with the higher time frames, I normally mean 4 hours and daily. Weekly is too far out, too long. The shorter time frames, the lower time frames, is from the 1 hour down. Right, from the 1 hour down, you'll see there's more noise. That's a disadvantage because there's less people involved. For instance, this is a 15-minute chart. That means for these, it links the closing prices. So this is what this line represents, the closing prices of every 15 minutes. 15 minutes, there's not a lot of people involved, or an hour and so on. So the less people involved, the more noisy the market gets. For instance, if we go to the 1 minute, you still see the structure, but there's a lot of noise. There's a lot of noise in the 1 minute candles, right? Because I love it. Because in 1 minute, the closing price of every 1 minute here, even if just a big, medium size order comes in, it can, cause a lot of spikiness and stuff here, but there's still a structure. So what time frame is the best? I suggest you start practicing on the higher time frames, practice to see that structure, and then if you can see it, then also practice on the lower time frames. When you begin to trade live, I suggest in the beginning, also for the same reason, start taking a couple of trades on the higher time frame. The structure is better just to build confidence. But if you've properly practiced on the lower time frames, then you can start taking test trades, and that'll be a demo because you're practicing your execution now. Very, very important. You keep the mental pressure as little as possible. If you can't make a net profit over a series of trades on a demo account, you will sure as things not do it on a live account, because on a live account there's much more mental pressure on you. So you practice until you can execute perfectly, until you can make a demo account grow. Then you go over to a cents account, so add a little bit more pressure. Remember the weights. We're not going to add 100 kilograms. we're going to get crushed. So we add a couple of kilos. We go to a cents account. We risked on a demo. We were actually just practicing our execution, seeing if we can do this consistently over a series of trades, taking good trades, and then you should make a net profit over a series of trades, right? As you practice and you get your eye in with the structure of the market. And then we go to a cents account, then we're risking cents. Not a lot of mental pressure. We're working on the skill of staying in this ebb and flow of the market. And then if you can do it on the cents, you build it up on the cents account until you've got enough to jump over to where you feel confident enough, and then you go to a standard account or ECN account, and then you're risking dollars, right? So more pressure, more weight. Be careful. The guys jump too quickly from a demo to a cents or to a standard account, and there's too much weight. It's like 100Ks you're pushing on. You're gonna get hurt. You might get hurt, right? So very important. I hope I answered your question, David. Okay, so missing out. So we all of these things is actually so simple to get out of your system by just practicing, keep on practicing, to see the rhythm of the market, to see the structure of the market. Right, and this one is very interesting. The reason why I laugh is that according to Mark Douglas and a lot of other guys, this is actually the most difficult route to get out of your system. Right. How do we manage profits? I can't tell you how many times, guys, I've talked to guys that are really good. They enter the market, they take the calculated risk, and then after that, especially when the market gives them a lot of profit, it's just a nightmare. The stress, where do I take my profit? I want more. Greed, the fear. Oh, the market's going to take me out. Any spikiness in the market, then he takes his profit, and then the market goes up, and then why did I why did I take my profits early? So this is a very important one, and this is also actually very easily solved. If we look, I'm just going to go back to the 4 hours, so we've got a nice structure again without this noise. All right. So I'm just going to explain the principle to you to help root out this fear as well. So you can easily stay in the ebb and the flow of the market. Right. So let's say there we saw the higher higher tops, higher bottoms. This is obviously an uptrend, right? Everybody should agree. If you don't, then contact me, seriously. Right, something happened there. We don't know why. We don't care why. We can see that higher tops, higher bottoms couldn't continue. The buyers weren't willing to pay anymore, and then the sellers the guys who were selling had to start lowering the prices to be able to get buyers. So there's more sellers than buyers. So we see that's the early stage of our next trend, right? Now the principle I want you to get is the following. There was a lot of pressure applied there. Buyers taking the price higher, but as we know, applied economics, price can't go higher just forever. People at some stage will say, I'm not willing to pay more, sorry. And then they stop buying, and the buyers gets out of the market, or there's less buyers, and then there's more sellers. To get their stuff sold, their position sold, they have to get the price lower, right? So this is what we're looking for. We're looking for the early stage of a next trend. Now there was a build up here, so a lot of buying pressure. That's why I use a example of a spring in my method, the moving average spring strategy. That spring is being compressed. Now it's fairly compressed there. So what does it want to do? It wants to release that pressure. So it starts bouncing in the other direction. Now let's say I'm just going to make it simple. Let's say there was opportunity. The market bounced up there. I'm not even going to bring in the Japanese candlesticks because I don't want confusion. I just want to I want to bring over the principle to you guys, right? Market started going down. There's definitely a lower bottom. There's something is afoot. This might. We never know. The price is not going to go down. That is wrong. That's a lie. It will burn you. It might go down. If you say is, neuro-linguistic programming, that's how our brains react to what we're saying. If I say the market is going to go down, then I'm in a factual fact believing that I know what the price is going to do, and I don't. And then my brain starts narrowing the options. Now I'm only I don't need any more information. I know now what's gonna happen. But it's a lie, remember. We don't. So I say we might. It's very, very important. It sounds so simple, but it's important. The market might go down. We are willing to take a calculated risk. The market goes up again. As it starts going down again, I'm willing to take a calculated risk there. Right. So what is happening now? The probability, because of all this demand pressure that came here, the probability is very high for the market to go a little in my direction. Right. Now, what is a little? We'll discuss that now. But just a little while. There's a high probability. And if anybody disagrees with me on that, please contact me. We Skype, email, Skype, and we sort this out. This is absolutely critical for you to understand. This was the last thing that fell into place for me. So there's a high probability for the market to go a little bit in my direction. If I start managing my risk there by taking partial profits, then I immediately release a lot of mental pressure. The pressure is not a lot, and it's easier for me to let the market do its thing, to show me where, you know, to show me what it wants to do. Lower tops, low bottoms means everything is fine. I can let that trade go. So obviously somewhere else I want to take some more profit. And then the last I'll take whenever the market is turned around. Sometimes it might go for a long, long time. Sometimes the market is really generous, you guys. So, and we need to be able to access that profits, to take that profit the market wants to give us, because we're going to need it in the following cycles. Right. So there's a high probability. So if we start taking the risk, then we know where to take a profit. We know why. And we're taking our profit off, releasing that mental pressure. That's absolutely critical, and it deals solidly with this last fear, when to take profits. Let me explain to you what happens if you don't do this. Right. So let's say again you entered there, and now we don't know, we're not sure, we actually want a lot of profit. So what is the chances of the market giving you lots of profit with every trade? According to me, my humble opinion is low. So there's a low probability or low chance that you're going to get a lot of profit with every trade, because we don't know. Nobody knows. We don't predict the market. We just look at the structure. So we decide beforehand we're not going to fall into that trap. So now if a guy has not, if he's in that trap, then now what happens? Okay, he's got his stop loss even there. That's good. But somewhere there. But now he's got a profit. Now he's under a lot of stress. When does he take his profit? When is let's say he thinks, no, man, the market is going to go up to there. Now he's waiting. Yeah, wonderful. The market goes up. He can't sleep, especially if it's high lots. The problem with these things come in, and that's why I say we have a business attitude. A lot of guys get stuck on the demo or small accounts and stuff. That is not what we want. This is a business. We want to be able to push these things up until we make some decent profit, right? Decent lot sizes. The guys I'm talking with, the guys that's got this thing mastered, they trade with 10, 20, 30, 40 lots, right? So this is serious. This is a business, right? So if it's big lot sizes, the market spikes like that, the guys can't sleep. You sweat and you have to check the market every 10 seconds or whatever. So it's a nightmare. That stress alone is going to kill you, because it not kill you, but it's going to, in the long run, it's going to not be good for you. You're not going to make it. It's not good for your health. It's not good for your relationships, right? We don't need that. We can't afford that. Right. Now, let's say the guy lives or he survives through that. It's going to be a bit of a wreck, but anyway, and now the market goes down. Yeah, he's so glad he didn't take his profits. And now the market starts again. He says, no, man, it's the same thing there. And the market starts going up. He's a wreck. He's an absolute total wreck. When does he close his profits? Now, remember, in his mind, this has been the profit that he should have had. Now he's losing now. He's still got an open trade. Never took his profits, never started managing his risk. He's a stress ball. And he's when he gets home, he kicks the cat and the dog, and he shouts to his wife and his children, and nothing is good for him. So if you recognize that symptoms, then you've got to do something about it. You've got to admit that it's not right. It's not gonna work for you. You can't. We're not built for that kind of stress, and your account is going to suffer. It's not going to be able to stay in that ebb and flow. You're not going to be able to make a net profit over a series of trades. You're just going to burn out. And somewhere here, the guy decides, okay, he's going to cut, and he cuts, and now he's lost all this profit, and this bothers him and it's painful and it's not nice. Can you see the amazing difference between a high probability where we start managing our profits because of common sense, a lot of pressure, the probability is high that gives us some profit. We start managing our risks there. Can you just see the common sense of taking that mental pressure off? The common sense of doing it in this way. If you can't, again, please contact me so we can talk. If you're serious about this online trading business, then you have to understand this very, very deeply. Right now, I'm just going to give you a glimpse. I actually discussed this in another webinar where I talk about the method that we use. So what we use is the Fibonacci extensions. Right, this has been well researched. I can give you stats and everything, but I'm not going to stand still there now. So, but we enter there. That's our entry. There's our stop loss. I use these guidelines. That's why I take my first profit. That's why I take my second profit. The chances of getting there is very high, lower, low. Not many get there. If it gets there, it's wonderful. It's a bonus. Most of the times, I don't even put the stop loss there because I let the market show me where to get out. And that's how you participate in these large moves. You take partial profit there. Your risk is much less. Guys, it just makes it very, very easy to stay in this ebb and flow of the market. Like I said, that's for another. I did that in another webinar. If any of you guys are interested in listening to that, I'm constantly upgrading, or not upgrading, learning. Also, trying, learning, and growing. I get feedback from people. If I get good feedback and I learn something, then I incorporate it in my seminars as I talk, and then I update those webinars. So that's just a normal part of growing. So as you can see, we've dealt just by practicing, by being patient, by being diligent, looking at that structure, identifying it. We've actually basically sorted out most of these, or weakened anyway, most of these routes. This is the core mindsets that cause traders not to make it. Those 80%, 90% guys that bomb out. And that's not just trading, that's business. People don't understand. They go into a business, they don't understand, they don't do their homework, they're not patient, they're not diligent, and then they take risks that they are not even aware of. That's why the stats for businesses in general, guys that survive 3 to 5 years is about 80% of them, they bomb out, and just 20 or 10%, 10 to 20% of them survive. Right, that is the reason. It's basically, I want to say, the mental issues regarding these things. So, okay, so now we're busy with that, and this is why this is so important for me. Everything we've just discussed, being diligent, all the guys that you see that are successful, if you go back, if you read their biographies, I love reading biographies. You can read in a book in 2-3 days, and you get a glimpse of a person's whole life, of all the things he went through. All the people that you see that are successful will have gone through this. What people don't see, that was just before they're successful. That's why they got successful. They were dedicated. They worked. They learned. They had discipline. They did this thing. They kept on trying, learning, and growing. There was disappointments. What people called failing, they had to learn. It's not failing, that's trying. The biggest mistake you can make is not to try, because if you don't try something, managing your risk well. I mean, if you're learning to ride a bike, if you have children, you don't let them learn on a tar road. You let them learn on nice thick uh, nice thick grass, that when they fall, they don't get hit. You limit the risk, but you have to try, because if you don't try, you're not going to learn, you're not going to grow. Right, the sacrifice, you have to put time into this. This is not going to happen by itself. You fail, but you go on again. You start seeing failure as good, as I tried. Okay, what can I learn from this? And then I learn and I grow. And persistence. How do you beat the guy that doesn't give up? I like this. This is why I like Captain America. You just don't give up. If you don't give up, how can people beat you? And I'm talking in a sense of a competition, but I mean, if you just don't give up, at some stage you must get it there. So especially if you get help, if you get a mentor, or get somebody that's got more experience to do the help. So in that sense, it's possible for every single person to discover their gifts, their talents and stuff. And if you just persist and you keep on, then you have to become successful, whatever success means to you. So it's not always success is not, in my view anyway, it's not just a bag of money. You can have a bag of money, but what about your health? What about your relationships? Success is much more wider than that for me anyway. So the important thing for me today is what are we going to do about it, guys? Bruce Lee, former Kung Fu master, he said, I do not fear a man, or I fear him. I fear not the man who has practiced 10,000 kicks once, but I do fear the man who has practiced one kick 10,000 times. That's mastery, guys. That's focused practice. That is what I'm talking about here the whole time. That's what that iceberg is all about. That is what I mean when I say take that line chart, make it, don't clutter it. Get rid of clutter. Get the basics. Practice that with seeing that flow, just the line chart, seeing it, putting in that trend line, seeing the early stages of the next trend. Practice it. One kick 10,000 times. Then even Bruce Lee will fear you. But anyway, so another guy is a master. He's a very good artist. He said, I shall become a master in this art only by a great deal of practice. Discipline. To practice, you need to sit there, put your bum on the chair and practice. We talk about screen time. That's how you make this your own. This is how you discover the market's got a rhythm. That's how you start seeing that rhythm and you get your rhythm. Just like David said, which time frame? Right. That question you're going to answer. You're going to figure out while you practice which time frame is going to fit the best for me. I know guys that trade the 4 hours. They look before work and after work, and they manage their trades. I know guys who don't like it. They like shorter time frames. They work, let's say, until 5, and then between 5 and 6 South African time anyway. The New York market is still open, and they trade. They look for a couple of trades on that. So if you've got more time, you can obviously, there's more opportunities for you. So I'm just going to finish here, then I'll look at the questions. Right, I'm going to skip this. We haven't got time. This is just 2 videos where I show you mastery. The first guy is really practiced long and hard with a ball. He can do things with the ball. Kick it up in the air, keep it up in the air. It's just amazing. And another guy is we practiced obviously on the farm somewhere long and hard with whips. And what he can do with whips is just amazing. The bottom line is if you try, you learn and you grow, and you've got that motivation, then you become good at something, right? You can become good at it. Now, very important for me, the market has a rhythm, but you have one too. You have to take ownership. You have to discover your own rhythm. And that's not going to happen without an action plan. You have to decide, what am I going to do, right? Like I said, mastery. Hopefully I told you guys you've got the aha now. We're not trying to predict the market. We're just learning, growing to stay in that ebb and flow of the market. And as you practice, you become better at it, becomes easier. The process that we go through is just look on the old charts, we identify that structure, and then if you've done enough hours of that on different time frames, different currency pairs, different commodities, different instruments, then you start going to the right hand side, right? I like practicing on a 1 minute there just to see, because if you haven't got a lot of time, you go to the 1 minute, you can actually see that ebb and flow happening. In an hour, you can get sometimes 3 or 4 opportunities there, and just practice, not for making profit, just to stay in that ebb and flow. You practice. You feel if you are right, then you start looking at a demo account, or you start taking the trades in a demo account. You start practicing your executions. That's whether you need a method. Where am I going to put my entry? Where am I going to put my stop loss? Where am I going to take profit? I told you already, we use a market structure that waves, and we use the Fibonacci extensions for common sense purposes. You practice that over and over until you don't make any mistakes anymore, right? In the beginning, you are going to make mistakes. It's logical. So that's not the point. The point is just to continue learning and growing. So if you don't make mistakes on execution mistakes, 0 mistakes, I can tell you how frustrating it is if you're thinking you're risking $10, and then you actually made a mistake with the lot sizing, and when it doesn't work, then you've made a mistake, then it's actually $100. I mean, 10 times more. That's very, very dangerous. You can think a bit higher up. If you think you're risking $100, and meantime, because of a mistake, you were risking 1,000, and you have to protect your account. That's not nice. Okay, it's not nice to find. That is the mistakes you make on a demo. We don't make them anymore, and your account is slowly growing. Then we jump over to a Sense account. Now we're doing the same thing. You can open a Sense account with $10. That's nothing, guys. It's not even a haircut. So, and then you've got the 1,000 cents. Then we practice the same. A little bit more pressure. We practice, we practice, we practice. And so we take it up slowly but surely. Right, very, very important. What are you going to do? Take ownership of this. This is like, I tell the guys, it's like studying a course, doing a course in applied economics. But it can be highly profitable if you've got the skill. If you've got the skill. If you've got the skill, the profits will come. If you haven't got the skill, forget it, right? So, so what are you doing? What is your routine? What are you going to do? How are you going to handle that? When are you going to sit? When are you going to study? When you go through that, you've practiced. What time frames? What time have you got available to actually do this? What equipment have you got? Use what you have as far as possible. You don't need space age, equipment to do this. Use what you have. Keep your overheads low. Where you're going to do it, get yourself a place, just like when you study, where you can focus, when you can get, when it's quiet or whatever, where you can focus, where you can take hold of this thing and can practice. Who's going to support you? A lot of guys unfortunately start this and they hide it from their wives. Get them involved. Tell them, I'm busy studying here. I'm getting a skill here. Please support me. Let them help you to keep to your schedule, to keep to your routine. Right. So and yeah, and hold you accountable. So it's much more difficult to take the guys that have the urge to to take, when they get greedy and they want to take a lot, increase the percentage they're using with their account by a lot. It's much more difficult if you know somebody's going to check. So it protects you actually. Right. So that's very, very important. The routine. Like I said, simple. We keep it simple. Keep your routine simple as well. Don't clutter it. Sometimes you read. Sometimes you're going to practice. So research and development, you're going to practice on the old charts. Practice that, especially in the beginning. Practice seeing that early stages of the next trend. Identify the structure. Sometimes you're going to practice to actually do it. Let's say on the 1 minute, or look at it develop. Other times you're gonna read a bit about these fears. Read books. I've got a nice summary of the trading in the zone that somebody did. It's a short summary. If you like it, please buy the book. I mean, it's really, really good to get the beef of it, work through it. So, and then you differ, but keep it simple. Don't clutter it with all sorts of other things, right? For example, if you're trading the daily time frame, you're going to check Monday to Friday every day after the New York close. Now I know that in South Africa is about 10 o'clock in the evening. Once a day, that's it. That's the daily candles or the daily chart that you're going to check. 4 hours, you can check Mondays to Fridays from 8 to 4. That's normally when the action happens, when you seek out opportunities. So 4 hours, not 4 in the morning for us, obviously it's a bit early, but 8 o'clock in the morning, 12 o'clock, 4 o'clock, perhaps 8 o'clock in the evening. You can check if you've got open positions, right? It's every 4 hours, right? So it's not very intense. If you like and you've practiced and you go to the lower time frames, then 5 minutes, you will check Mondays to Fridays. Let's say the London Open is with us about 9 o'clock. 3 hours, if you've got that time to watch. 3 hours after that, lots of nice action. You get opportunities. You wait for the structure. You wait for the early stages of the next trend. Right, and please, you don't have to do it alone. There's two groups of people that's always attending, that's always watching and learning. One is the guys that really have a passion for this. A passion, they want to do this, they love this language, they want to learn this language of the market, like me, like a lot of other guys I'm training. But it's just like a doctor or a lawyer. Not everybody wants to become one. So it's for that guys, we've got Skype sessions. I've got Skype sessions every single day with those guys, teaching them. Their learning curves go up. And then we've got the other guys, right? That's people that are the doctors, the lawyers. They know they have to do something to learn this, even if it's just for their own long-term portfolio, this language, but they don't want to do it full time. So even for them, we've got the Forex Time Invest options, where a guy that's really he's got a passion for it, and he starts getting good, then he opens a strategy manager account. We've got a whole webinars about that if you want to go and look. And you, the other guys can, they need some training, especially with managing risk and so on, not using too much of your capital, but they can actually open an investment account and then link. It's their own account. That's very, very important. The money stays in their own account, and they create a link. And when this other guy, and you can track, we track all his stats. You can see his equity curve, his drawdowns, and so on. If he takes a trade, that trade is copied to the investor's account, and then when he makes a profit, you also make a profit, and there's profit sharing, obviously, to that's his payment for doing his for the joint, making profit for you. But normally that's about 30-70, so you keep 70 and he takes 30, he or she. So that's another way that the normal people that hasn't got the time, and if you've got a portfolio like that, then you only monitor it once a week, once a month. There's a totally different way of doing that trading. If you're interested in that, you can also email me. I'll get to my email now. And then I'll show you that, teach you, you can teach that doesn't need so much training than trading full time. So book it. Let me go to my, okay, this is just to close off. We're almost finished. If you do that properly, if you just continue, start with 80 or 50, just keeping slowly adding that weight, you will get to 100, 200, whatever kgs that you're pumping, right? So your account will slowly grow. Your lot sizes will grow. I remember when I was talking to my my one mentor that helped me to wake up. I call it wake up, to realize that I was doing some fundamental things not right. He said it's like a river that flows, Theunis. You just stay in the river. He was trading, and it was, yes, the amounts that he was using when he was trading was huge. It looked huge to me, but he said, don't be fooled. I started small, and this is still a small part of my portfolio. I just built it up over time. So and you get to a point where you just easily stay, all those fears are dealt with. You just easily stay in this ebb and flow of the market, almost like a river. So you flow with it. You just keep in that flow. There's no effort, almost effortless. Just take the risk, manage the trade, take the risk, manage the trade. If it stops you out to protect your account, and then that's the idea. Then you get to step 5, it's automatic. And it's very, very nice. And this is just to end off before I look at the questions. There's hope, guys. If you feel if you're doing this forever and it doesn't work, there is actually hope. If you get back to the basics, you're patient, you're diligent, you get help. Especially if you're stuck in the beginning, you just get guidance to go on. You've got the passion, contact me. There's hope. Let me just get back to that where my email is so I can show you. Nope, that's not there. Right, there's my email. Please do contact me. I want to help you step by step. You're going to do the work. I can only guide you. So, but I'm doing it for a lot of people. It works for me. It will work for you if you're patient and diligent. Right, let's see if I can answer some questions here. Okay, Jorgesh asked, and you show us once again where you looked at the daily or the 4-hourly. Daily and 4-hourly is very, very nice to see. You see that ebb and flow, very nice. This is a 4 hours. You've got those times when the market does a few things, but that's why we take a calculated risk. There, it was a bit of a ranging market, and then starts going down again. And there was a uptrend, some ranging again. So that's why it's so important to practice this. Okay, there's a jump out there, starts going and down. Obviously, you can see that's why I say with the higher time frames, the problem is the opportunities. You can see it's from May until September, so there's not a lot of opportunities here. Right, the daily one. Let's look at the daily one quick. Go to a clean chart. Yeah, this one hasn't had a lot of structure here, but it's always there. You just have to get your eye in. On the daily, this wouldn't have been a very profitable time frame. That's why I like the fact that you can, you know, 'cause you can see it's from May until September, so there's not a lot of opportunities here. Right, the daily one. Let's look at the daily one quick. Go to a clean chart. Yeah, this one hasn't had a lot of structure here, but it's always there. You just have to get your eye in. On the daily, this wouldn't have been a very profitable time frame. That's why I like the fact that you can you can choose time frames. So there's some opportunities there, some lower bottoms, lower tops. Right, that's what I want you guys to practice. If you're stuck, if you're beginning, practicing the structure. If you don't see the structure, then there is anything. There is nothing. Then you go to a place, you can go to to a time frame or to another pair or instrument where you do see the structure. Right. Okay, I hope I answered your question. And then Pongs asked, thank you, I just found out your last webinar. Okay, it's very basic. Yes, I get a lot of feedback. At the beginning, I also focused on guys telling me, no, but why are you so basic? The reason why is that the whole entertainment trap, the whole thing about the entertainment trap is it keeps you trapped with all sorts of expectations, over expectations that you're going to get rich quick. And it gives you hope that by studying, more indicators, more theories, you're going to actually be able to predict the market. And that's why step 3, the aha moment, is so important. You will never be, and that's why people get stuck in step 2. They jump from method to method. I don't care. You can get a doctor's degree in methods and or in indicators and oscillators and stuff. It will not help you to trade profitably. You must get that basic sorted out, that structure of the market. The more basic you keep it, the more easy it is to master and to get your cash flow going. Guys, this is not about entertainment. This is not about fancy indicators or fancy um, colors and fancy charts and stuff. It's simply about seeing that flow of the market, the ebb and the flow of the market, taking a calculated risk and making a profit over a net series of trades. This is a business, right? I can't, I understand because I was stuck in there for a long time and it took me a while to get unstuck. But it's almost amazing to see a guy starting to see it and then he just starts gravitating again, puts on some more, put in the candles, take away the line chart, put in some more indicators. It's almost like you find comfort in that. And there you go again. Then you're getting off and it starts getting more confused and you get analysis paralysis and you get this stuff. And then most of the times when that guy, we haven't trained for a while and I get back, I tell him, listen, why is all that clutter there on the chart? And he says, no, but I like this and it helps me with this. And then how's your trading going? No, not making a net profit over a series of trades. Okay, let's get rid of all this clutter. Let's go to the basics. And then their eyes goes, okay, yeah, I understand. I can't tell you how many times that happens. We are not into this for the entertainment. We are into this to make it work. We want to become successful traders. Forex time spends hundreds of thousands of dollars, guys, a year training their clients because they know. Once the guy clicks and he gets trained and he's educated and he takes this and he practices, then he will become successful, right? So it's like that with anything, walking, talking, bikes, whatever, riding a bike, car, any skill that you get, right? So there's always a risk, but if you practice, if you know the risks, you've got that, your mental framework is strong, your mental muscles are strong, then the chances of you being successful is just so much higher, and that's what we want. We want successful clients because then you stay with us. I've been trading for a long time, and this thing about clients coming in, blowing their accounts and going away, yeah, I don't like it. I hate it. So I want you guys to grasp this. I want people to grasp this and to make it work, right? Okay, I think we're over time already. So I hope you found some value and it was good talking to you guys. So till next time, goodbye.